Investors watch how Trump's tariffs are hitting Wall Street earnings. Moscow warns trade wars are a major threat even as Russia escapes US tariffs but faces global sanctions. And foreign interest in Indian equities lifts its stock markets as traders navigate Trump's trade war. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Asian markets mostly rose on Tuesday after a choppy session on Wall Street. Investors are eyeing a busy week of data and earnings releases that could provide clues about the effects of Donald Trump's trade policies. Four of the so-called Magnificent Seven companies, Amazon, Apple, Meta and Microsoft, came under pressure briefly during the session ahead of their quarterly reports. The dollar headed towards its largest monthly fall in years as investors braced for the trade war to be felt in earnings and economic data. Meanwhile, gold continued its decline on signs of softening trade tensions between the US and its trading partners. Let's get more on this now with Jamil Ahmed in Dubai. He's chief analyst at GTC. Now, Jamil, investors are awaiting some key US economic data to assess the impact of Trump's tariffs so far. Could the president's trade policies have already hit the US economy?
Well, the truth is that we haven't had enough data to really weigh what the impact has been. But of course, we've all seen the projections. For example, that statement from the IMF last week, where the US got the largest economic downgrade of all the advanced economies for 2025, from somewhere around expecting growth 2.5 to 2.7% for this year, all the way down to around 1.7 to 1.8%. On top of this, we've also got the dollar, which has had a drop of 8% in 2025. I think that's an investor reflection that these tariffs are going to weigh heavily on the US economy, which of course is also being echoed by institutions. And on top of this, what we are starting to notice is some of the consumer confidence readings are coming down towards the lowest in levels. Some readings even suggesting the lowest of this century. And consumer confidence and consumer spending, of course, is crucially important to the United States economy because it's the largest contributor of US GDP. At the moment, this is all based on the fear of the tariffs. We still need some time to digest what impact the tariffs are having on economies. Of course, this week, we're starting to see certain corporations announce some price rises when it comes to taxes and so forth, but not enough time really yet to see what the real impact has been.
Right, and there are also some major corporate earnings due to be released later this week. How's that looking?
Well, we're going to expect to see some projections, the likes of Apple, Amazon, Microsoft, and Meta. Of course, that's the holding group of Facebook, to see what impact these tariffs might have on their own outlook for 2025. If you look at the technology stocks so far this year, like all global financial markets, they have been kept in this, I would say, seesaw from this tariff uncertainty. However, there are other technology stocks, such as Netflix, that are starting to hit new all-time highs. So let's see what happens. We need to see, it's one of those matters where the devil's in the detail, and we need to see what guidance these companies provide this week.
Meanwhile, demand for safe haven assets has cooled over talks of trade agreements. What's the likelihood of us seeing deals being announced soon?
Well, this comes down to whether the US administration is playing poker and has helped to make deals, or whether this really is going to turn into an all-out economic war. And I think the financial market volatility we've seen across all asset classes over the past 6 weeks shows that this is anybody's game towards guessing which way this is going to head next. Gold prices, of course, hit their all-time high of $3,500 US just last week. It's rallied more than 20% in 2025. Continuing what was a stellar 2024 as well. But based on these expectations that tariffs are going to be rolled back, we saw overnight automobiles seems to be the next industry that seems to have less tariffs than what was threatened just a couple of weeks ago. Gold prices have now dipped around $150 from the all-time high of last week. Let's see where the headlines hit by this time tomorrow, because everything's changing hour by hour.
Jamil Ahmed, chief analyst at GTC, thank you very much for your insights. Now, tens of thousands of India's new retail investors, many of whom began trading during the pandemic, are facing challenges with markets shaky amid global tariff tensions. The US-China trade barbs and protectionist rhetoric is shaking investor confidence. But experts say the Indian stock exchange is on the recovery curve despite a considerable blow to trading volumes. Smita Sharma has the details.
Dhanur Chawla took to daily stock trading as a young finance graduate in 2019.
If you're right, it's very rewarding. And if you are wrong, it humbles you.
Earlier this month, Trump's tariff announcement triggered an almost 3% plunge, the biggest single-day fall of 2025 for the Indian stock market. Chawla suffered financial losses too as markets plunged.
I would say almost everyone has taken a hit on their portfolio, be it an experienced or a newcomer. Amongst traders, there is anxiety, no doubt about it. But I would say, for me particularly, I'm not facing much of an anxiety because all these reactions and of global events, they all are short term. I am anxious in terms of some of the sectors which have drastically taken hit, in particular IT sector and retail sector. But I wouldn't say that this would stop me to stop investing into the market.
Currently, there are an estimated 113 million unique investors in India trading in stocks, mutual funds, derivatives, future options, among others. Almost 5 to 6 times growth since the pandemic. But bleeding across several sectors is causing much anxiety. Experts say it is an impending course correction for the markets.
COVID was a catalyst, I should say, because there was nothing to do, so people took to trading. If I take you a year back, markets were really doing really well, and there was a sense of optimism in the market. And that actually transpired to irrational exuberance, I should say.
Amid the US-China tariff escalation, many have been forced to rethink their investments. But Indian markets are looking buoyant again.
If you go back a couple of weeks, the anxiety was really high because nobody knew what was coming. So when Donald Trump imposed tariff across the board, India and a couple of other countries did not retaliate immediately, but China, took that to themselves and they retaliated. So they are at the receiving end, and slowly and gradually when the picture is emerging, it looks like that we will not be hurt that much as what other countries would be.
Retail investors are wary as the markets remain uncertain with Trump's almost daily twists and turns. But investors are more mature and disciplined now, willing to ride the storm. India's long-term growth story is positive, and hopes remain that markets will correct themselves despite the looming shadow of trade wars and domestic economic challenges. Smita Sharma, TRT World, New Delhi.
It's been a strong start to the week for Indian markets, but with tensions brewing in the background, can the rally hold? India's benchmark indices, the Sensex and Nifty, climbed around 1% on Monday. Strong earnings from Reliance and upbeat cues from Asia also lifted sentiment. But gains were kept in check by rising geopolitical tensions between India and Pakistan after last week's attack in India-administered Kashmir. Reliance Industries, India's biggest listed company, stole the show, soaring over 5% to hit a 6-month high. The stock got a major boost after beating profit estimates, with analysts rushing to raise their targets and upgrade their ratings. Financials were in focus, rising 1% on fresh foreign interest. IT stocks cooled off slightly after last week's big rally, slipping 0.2%. Mid and small caps stayed strong, posting solid gains of 0.8 and 1.6%. Let's get more on this now with Rajiv Biswas in Singapore. He's CEO at Asia Pacific Economics. Welcome back to TRT World, Rajiv. Now, India has more than 100 million retail investors. How are they navigating this market volatility triggered by US-China trade tensions?
Well, the Indian stock market has seen considerable volatility in the first 4 months of this year as global stock markets have been in turmoil due to the impact of proposed US tariff measures on many countries worldwide, including India. But in recent weeks, we've seen a resurgence of confidence in the Indian stock market. And what has transpired in the last few weeks is that both foreign investors and domestic investors have again started putting net new investment inflows into the Indian stock market. As a result of that, there's been quite a strong rally in recent weeks, and the Indian stock market is now up in the calendar year to date.
And foreign investors have pumped around $4 billion into Indian equities over the past few weeks. So what makes Indian markets so attractive at the moment?
I think there's a number of factors that are supporting the Indian stock market. First of all, the Indian Central Bank, the Reserve Bank of India, has cut policy rates twice already this year. And they've also stated that they're shifting to a more accommodative monetary policy stance. So that is increasing the optimism that liquidity support from the central bank will help to boost domestic demand and support economic growth. Another important factor is that the Indian Central Bank has forecast that Indian GDP growth this fiscal year will be around 6.5%. And that would be the strongest growth amongst the G20 countries if it actually is realized. So I think those are fundamental drivers for the Indian economy. India is still very much a domestic demand-driven economy, and the interest rate cuts will help to support growth. But of course, if growth of over 6% is achieved, this will continue to support earnings growth for Indian companies. And we've seen quite good earnings results already for the fourth quarter from some of India's big companies, and that's helped to support a rally, particularly for the blue chip Indian shares.
Meanwhile, the US has suggested that they're close to a trade deal with India. What could that look like?
Well, there was a very positive meeting between US Vice President Vance and Indian Prime Minister Modi when Vice President Vance visited India just a few days ago. And a key focus of that discussion was an agreement on the frame of reference for trade negotiations for a US-India bilateral trade deal. And of course, both sides want tariff reductions in key areas of interest. India wants much greater technology access to US technology. And from the US side, they're hoping to get greater tariff reductions from India in many areas, such as autos. The US is keen to export more electric vehicles to India, and also in agriculture, which is a major area of US exports. And that agricultural area could be somewhat of a controversial area, but overall, I think it looks like there's a lot of positive momentum from both sides to try to get a trade deal agreed. And there's a lot of urgency around that. They're trying to get a deal done before the end of this year because the US has threatened to increase tariffs on India quite significantly. But if a trade deal can be done quickly, that will avert those tariff measures and will put India in a very strong position as a key trade partner of the US, and will also help India to become a more important source for supply chain diversification for the US export market as well.
Rajiv Biswas, CEO at Asia Pacific Economics, thank you very much for being with us.
Thank you.
Following global uncertainty over tariffs introduced by the US President Donald Trump, Moscow says trade conflicts are a new major threat. Although Russia was spared from US tariffs, it's under a multitude of international sanctions, as Dasha Chernyshova reports.
Russia was one of the few countries to escape censure under Trump's tariffs. But it is unclear how the economic consequences for the world's most sanctioned economy will play out. For now, relatively immune to worldwide financial turbulence, Russia may benefit from trade flows reorientation away from the United States to the developing countries. But global economic uncertainty is driving oil prices down, and that creates additional risks to the Russian budget.
You have the oil price effect, whereby the higher the tariffs, the greater the threat of global recession, the greater the effect on oil prices, and the more significant the potential reduction in oil prices, which is something that is still very important for Russia because Russia still very much depends on oil exports.
Another fact is that the US tariffs will likely push China even closer to Russia, one of the largest markets in Europe, and away from the US market. Donald Trump's actions also dispelled myths about the stability of the dollar-based international economic system, and that is adding value to alternative economic alliances.
Trump has caused turbulence, fear in the world that anyone could come under tariffs. The global economy is shaken, chains are broken, logistics are changing. But now, we in BRICS have more chances to take those chains off, to capitalize on it, because there's no more trust in Trump and the US.
Meanwhile, Moscow continues its negotiations with the US, and their economic focus is evident even in the choice of representatives for official discussions. Bilateral trade hit the lowest point after 2022.
Despite the imposition of sanctions, exports worth $3 billion, mostly fertilizer and precious metals, still transited to the US last year. And now, with signs of a US-Russia rapprochement, talk of a deeper economic cooperation is back on the agenda.
The US-Russia trade relationship is starting from such a low base that there is tremendous scope for growth and expansion.
We are already seeing signs that there are preparations on both sides, I think, on the Western side and on the Russian side to prepare for the return of some of the companies that have left the Russian market. And I think Russia will be seeking to keep this relatively open.
With the potential rediscovery of pre-2022 cooperation spheres such as agriculture, aviation, airspace and energy, Moscow and Washington could explore new areas such as the digital economy and joint operations in the Arctic. For Russia, the uncertainty of where all these tectonic shifts in global trade will end up is high risk, but it is also a golden opportunity for some. Dasha Cherneshova, TRT World, Moscow.
Meanwhile, US President Donald Trump will reduce the impact of his tariffs on the motor industry. Officials say the administration will alleviate some duties imposed on foreign parts in domestically manufactured cars and prevent tariffs on cars made abroad from piling up. Last week, a coalition of US auto industry groups warned Trump that his tariffs would cut car sales and raise prices. Selena Downs has more from Washington, D.C.
25% on foreign-made cars coming into America. That was imposed earlier this month. This was all part of President Trump's grand plan to bring back the golden age of auto manufacturing to America, when it was known for cars like the Mustang, the Chevrolet, the Buick and the Cadillac. But of course, its output now is surpassed by China. And even those companies like Ford and General Motors, who are headquartered here in America, manufacture a lot of vehicles abroad in countries like China, Canada and Mexico, or they import vehicle parts and then they assemble their cars here. So they've been lobbying the Trump administration on fairly much a daily basis, saying that to bring back auto manufacturing to America could take decades. And in the meantime, there could be a lot of short-term gain in the form of price rises for consumers. There were estimates that it could add $6,000 to the cost of a car for consumers here in America, and also job losses. The industry was very worried about more job losses in a sector that has already seen huge job cuts over the past decade. So they have been lobbying the Trump administration on an almost daily basis. It seems President Trump has listened. He has softened some of the tariffs, so the industry will still have to pay 25% on cars coming into America, but they won't then have to pay an additional 25% on steel and aluminium tariffs. So if, in effect, the administration won't be stacking tariffs on tariffs.
Now a quick look at some of the other top business stories from around the world. Chinese authorities have announced that US tariffs are behind their decision to stop accepting Boeing aircraft. Beijing says the tariffs have disrupted global supply chains and hurt both Chinese airlines and Boeing. Last week, China sent back jets it had ordered from the US plane maker, following the US hiking levies on Chinese products to 145%. Amazon has launched the first 27 satellites for its Kuiper internet network, aiming to compete with SpaceX Starlink. The $10 billion project plans to send over 3,200 satellites into orbit to bring broadband to rural and remote areas. The tech giant hopes to begin commercial service for consumers, enterprises and governments later this year. HSBC has unveiled a $3 billion share buyback despite a sharp 25% drop in first quarter profit. The hit came from one-off charges tied to exits in Canada and Argentina, but core performance stayed strong. The London-based bank reported profit before tax of $9.5 billion for the quarter. And ChatGPT is rolling out shopping features, bringing AI into the world of online retail. Traditionally dominated by Amazon and Google, the update promises to make it easier for users to view prices, read reviews, and access direct links to purchase personalized product recommendations. OpenAI emphasized that the selections are chosen independently and are not ads. To the Ivory Coast now, where cocoa farming has supported families for years, but the planned US tariffs have left farmers worried. Despite the temporary suspension, the farmers are concerned that the proposed tariffs will destabilize the local cocoa market and increase prices globally. Brenda Redido has the details.
For years, cocoa farming has been an important cash crop for farmers in Gatakro village. But for farmers like Bathin Asi Konan, cocoa farming is now becoming unprofitable.
When we make money, we work well and have enough cocoa to export. But if we are not happy, how can we give ourselves to this work? We can't, because we are suffering. I hire people to come and help me day and night, to clean, to grind. I pay for all of that. And for all of that, the price is not good.
Known as the world's biggest cocoa producer, Ivorian farmers export their cocoa mainly to the United States. But plans by President Donald Trump to impose 21% reciprocal tariffs on goods from Ivory Coast makes things difficult. Although Trump's administration has temporarily suspended the planned tariffs pending further review, there are concerns that its implementation will affect the cocoa industry.
If the United States imposed a 20% tax, exporters will inevitably not be able to export to the United States. And as a result, there will be a problem with increased supply in Ivory Coast. As a result of this, after the supply has increased, our European customers will be forced to buy well.
The proposed tariffs comes at a time farmers are still grappling with the effects of climate change, which has led to low harvest and increased cocoa prices. Ivory Coast produces over 2 million metric tons of cocoa annually. Out of this, over 200,000 metric tons are exported to the US, according to the Ivory Coast Coffee and Cocoa Council. Cocoa beans worth $3.6 billion were exported to the US in 2023. But with the impending 21% tariffs on Ivory Coast products, for now, cocoa farmers are nervous about how they will keep their cocoa businesses alive should the suspension be lifted. Brenda Redido, TRT World.
Fishing communities along Syria's coastline battle more than just rough seas. Years of war, economic collapse and political upheaval have left many coastal families clinging to a lifeline. However, in the shadows of hardship, there are signs of quiet resilience. TRT World's Noor Kormush reports.
Syria's fishermen rise with the sun along the eastern edge of the Mediterranean. Muhammad's tools are simple, his vessels aging, but the sea still calls. Fishing here has always been a way of life passed down through generations, with many challenges shaping daily routines, drawing both sustenance and purpose from the water.
I inherited this profession from my great-grandfather. We used to have to pay ransoms to regime personnel. The situation in general was harsh, and fishing was random and chaotic. We spent a lot on logistics and fuel. After the fall of Assad, the situation slightly improved due to the absence of ransoms. However, we still face difficulties and a hard living situation.
The fall of the Assad regime has slightly shifted tides. With fewer checkpoints and no forced payouts to regime officials, fishermen say barriers have lifted. In the local markets, the rhythm of recovery is cautious. Prices have become more reasonable and trade flows with fewer restrictions.
The prices of fish dropped after the fall of Assad due to the absence of extra costs, such as ransoms and payments to officers. They used to control everything. Fishermen and traders had to pay a lot just to work at sea. They also controlled exporting, importing, and the checkpoints. Now people can afford to buy fish, though there are still some difficulties. This market now provides work opportunities for many.
People say regime-affiliated clients were the most able to afford going to restaurants like this. But now a broader mix of Syrians from different cities can afford to eat out.
Our restaurant provides seafood. Before the fall of Assad, tourism was low and the most customers were regime-affiliated people. We had to pay a lot just to keep the business running. Now we go to buy fresh fish directly from the market. Also, people from different Syrian cities are coming here, which was impossible before.
Even though the change is subtle, yet still significant, fishermen say their bond with the sea remains deep, and their hope for better days still endures. Life along Syria's coast isn't only about making a living. It's about holding on to a way of life. For fishermen, traders, and business owners alike, the sea means much more than just a catch to take to market and feeding families. It carries memory, identity, and the quiet hope that tomorrow's water will be kinder than today's. Newcomer Shtiati World, Latakia, Syria.
Well, that's all your business news for now. Thanks for watching.